Welcome to Dragonfly Trading. My name is Carrie, and I'm a full-time Elliott wave trader in the crypto and forex markets. Today's video is going to be a update on Bitcoin and ETH. Remember, this is not financial advice. This is just the way that I see the market, and I intend to trade it. So we are going to close a monthly candle here in about 5 hours or so. And so far, this looks like a really good monthly candle. Nothing bad to say about it. It looks good. It's not, any certain type of candle, really. It's not really a hammer or any significant candle, but we have totally engulfed the price range here, and this would be good. All right, so moving down to the weekly time frame. We have another day left on this candle. If we can close it like this, it would be really nice. What we don't want to happen with this candle is for it to come down and create like an inverted hammer, or it really wouldn't be a shooting star. It would have to really come down. But basically what I'm talking about is we don't want a candle that looks like what we closed on the 6-month. A candle that looks like this. Okay. We did close that candle on the 6-month time frame, and these time frames matter. As you can see, up on the 12-month, when you take a look, our support is coming in right at 14,000. 9-month, same thing, 14,000. We do have these wicks that could stop us, but there's nothing really there until those wicks. But the main support is at these candle closes and this wick. 6-month, same thing. And also when you turn on and go down to the monthly, as you can see, our support's coming right in at that $13,000, $14,000 mark where the real support is. Now, we could definitely get held by the top of this run, 100%. And I'm not even saying that we are going to come down that low. It's just something to be aware of, okay? Okay. So, I saw another YouTube channel by accident, and this person was pulling fibs on the price action here, trying to project the fifth wave. So to project this fifth wave, and I'm just going to show you real quick here, you're going to pull from the bottom of your 1 to the top of your 1 to the bottom of your 2. There's a couple of ways to do it, but this is the main way. And we know that we want this to be a wave 1, 2, 3, 4, and we want this fifth. So a normal fifth we have coming in right at around 111,000. That's if I pulled this exactly to the tick. That's where it would hit without any overextension, any FOMO buyers, and we know that if we start moving here, break this high, that's going to happen most likely. Because we didn't get an overextended third, if this is a third wave. So we could go as high as 198,000, 200,000. That's some serious dough. That's for sure. So, yeah, it could definitely get up that high. So what would invalidate it? Well, the only thing that would invalidate that is if we were to come into this red line. Our wave 4 cannot come into this red line. If it does, it's going to invalidate it. And then I'm going to be looking at this like this run is over and we're making something different here. Okay. So if you're asking, well, why can't this be over here? Why can't we just blast to the moon now? Well, if you pull time on it, and if this is a fourth wave and we are correcting this leg here, the minimum requirements are around August 23rd, 24th. That's the minimum time that it should take, and we're not there yet. That's one of the reasons. And the second reason is the way this count looks down here. The way that we took off, which I'll get into when we get down there. Okay. Can this take longer? Yes, it can take longer, but the minimum we're looking at is in August 23rd. Okay. And we need to be coming down into that, not going up into it. All right. So let's take a look at RSI real quick here. And I kind of go over this every video, and I know it's repetitive for some. And I thank you for watching every video. But this is for the new people that this is their first time ever watching my channel. Because it's very important. In the 2017 bull run, we were hitting way up into the 90s, and when we came down, we were able to hold the 50 every time, every correction. We'd push up, we'd hold the 50, push up, hold the 50. When we were in this sideways movement, like we are now, we were holding the 40. And every time we pushed up and we tried, like over in here too, to get out of this sideways movement, we would hit our heads between 50 and 60. So what needs to happen on the weekly time frame is we need to get up above 60 and we need to find it as support. Even if this up move is over right now and we come down, we still need to eventually get above 60 and find it as support. So let's go down to the daily. When we were in this daily uptrend, we would push way up into the 90s and we would find 50 to 40 as support. Ever since we hit this top up here, we got rejected by 70 to 75. And we have been pushing down into 30, hitting 60, pushing down into 30, hitting 60, and there it goes, okay? Finally, we have been able to push back up into the 80. What needs to happen on the daily time frame, even if we are done here and we're coming down, we want to hold 40. We don't want to break 40 again. $50 would be better, but holding 40 would be nice. That's really what we need to do. We need to hold 40. Okay? All right. So let's talk about this count on a higher time frame. So depending on how you look at this, okay, some Elliottians are going to see this as an A, a B, and a C as a three-wave move. Some are going to see it as a 1, a 2, a 3, maybe 3 here, 4, and then they're expecting a fifth wave move down. In Elliott wave, we have corrections. One starts with 5. We get a 3-wave correction for a B, and then we get another 5. This is what we call a zigzag. This B wave doesn't go up normally past the 618. So A, B, C, zigzag. And I know the people that know Elliott wave are probably saying, oh gosh, Carrie, no. But bear with me. This is for the people that don't know Elliott wave, and this could really help them. Okay. So then we have corrections called flats that are 3 waves, and then we get 5. 3, 3, 5. Now this B can sometimes break the start of the A. So these are labeled ABC also. Okay. This B wave can sometimes break the start of the A and sometimes not. So they have a big range. But the count is 3, 3, 5. Then we have WXYs that are 3, 3, 3. Okay? And this is going to explain this whole thing. So let's start with this one. So if they are seeing this, take this off here real quick. So if this is over right here, and we come down in 5 waves, they will be looking at this as we just made this leg right here. Because we will have 1, 2, 3, 4, 5. Yes, we will get the B, but then we will need another 5 over here, and this is not a correction that we want. So the thing to watch out for right now is, do we come down in 5 waves right here? Now, if we can rally higher here, and we can come into 47,000, this low right here, all we have to do is come higher and touch it. We can wipe this correction right off the table, because the wave 4 is not allowed to come into the wave 1. Okay? So let's get this to come on up here and touch it, and then we can wipe this one right off the table. Okay? If we see this as an A, a B, and a C, that's a 3-wave move. If we can come and rally higher, then we've made the B. So then we have 3, 3, and then all we have left is, do we make 5 or do we make 3? Because they both start with 3, 3. So right here, we would either get 5 or we would get 3. And it's just labeling. And best case scenario is that we rally really high, because I said this B wave has a lot of room it can go, and so does this one, the X wave. We possibly can make a higher low. And this would be a very bullish correction, and we would blast to the moon. So I hope that helped you understand a little bit better what we're looking at here by just those 3 little corrections I showed you. All right, so let's talk about this leg. How can we get this leg to go higher? Well, if this leg is done, or close to being done, and it's made a 3-wave move, what can happen is that we come down in some sort of corrective way. Okay? Just corrective way. It doesn't matter. We just don't want to make 5 waves. Then we can rally higher in 5 or 3. And that's how we get up higher. And then this whole move turns in to a 3-wave move. And we get up higher. The higher, the better, like I say in every video. The higher, the better. Because it makes this leg higher. All right. So let's go down a little further and let's take a look at this. So this leg, I am not going to lie, has been a difficult leg. It's ugly. One minute I look at it and I'm convinced it's corrective. The other minute I look at it, I'm like, no, it's not. It's impulsive. Okay. And when I mean impulsive, I mean C leg. But we did start over here, and I'm confident about that. We started in 3 waves. And then here, we have 3 waves. So whether this is 5 or it's 3, I'm pretty confident it's either done or it's just about done. If it is a 5-wave move, we've created 1, 2. I believe that this is the top of the 3rd. We made a 4th here, and we either completed our 5th or we've got another hit to the high. As you can see on the 4-hour, we do have this bearish divergence. This is moving upwards. This is moving downwards. So maybe we have one more last little upturn here, and then we correct. But what we want to see here when we correct is not a 5-wave move. Because what starts with 5 ends with 5. And this will get me believing that we're going to not be able to get higher. Okay. We want to trend higher. So if it gives us another hit to the high, we want to see corrections. Okay. We want to see these 3-wave you to death corrections. This is when we'll be happy for them, so that we can get up higher. But bearish scenario is that this move is over or almost over, and we are getting ready to start our partner wave. Okay. So the object here is to trend higher. Okay, we need to trend higher. All right, let's take a look at ETH. ETH on the monthly time frame is going to close a beautiful candle if we close it like this. Okay. That's a nice candle to close. It's a hammer candle. Okay, weekly. And just like with Bitcoin, and I'm going to go through this a little bit faster, it's the same scenario about RSI. When we were correcting in this one and in this run, we held the 50. When we were correcting in here, we held the 50. Well, so far, now we have gone under it a little bit, but so far we've been able to hold it. Close enough anyway. We need to get out of here. That's the object of the game. We need to get out of this 50 zone. Get up here in these upper 60s, 70s, and find it as support. Daily time frame. When we were in this uptrend, we were holding 50, 50, 50, 50. One time we broke through, but that's a cracking wick. Okay. We were able to hold 40, 50. Now we've broken through into the 30s. We've finally been able to tick our heads above. When the daily comes down, it needs to hold 50 or 40. I don't want to see it break back down into 30s. If that happens, I will still see us in a downtrend. Okay. And ETH at the moment, let's look at the 8-hour. Well, it slightly broke it, so it doesn't really have bearish divergence, but it does have it here, just like Bitcoin. Okay, between these points. All right, let's talk about the count. Now, just like with Bitcoin, the way I showed you those counts, I'm not going to go over it again in this one, because that really will drive the people that know Elliott Wave completely bonkers. The whole object here is just like Bitcoin for us, for this 3-wave move not to be the end of it. Let's get the ABC us to death moves, okay? So that this would be a connector and we could make a bigger 3-wave move. Get us up higher. So that when we need our partner, it will be higher. And we can possibly protect this low. Make a higher low. Make a really bullish flat here. And moon. Okay. Cannot really project this leg or tell you where it's going to go until we see if we can trend higher. Complete invalidation of this going higher would be, now most people would say this low, okay? But I'm going to say it's going to be breaking 1491. And you're probably saying, well, why would it be breaking 1491? Oops. Well, there's something called the expanded B pocket. Okay? And if we've made a 3-wave move here, say it comes higher, we can make another 3-wave move that comes down into this expanded B pocket. And this becomes A, this becomes B, and then we can get a big 5-wave move for a C. And this is what we call an expanded flat. This can happen. And it can happen with Bitcoin also. So on Bitcoin, what would I say complete invalidation is? Now this would have to be if we're done here. It's going to be 24,920. Now am I leaning this way that we're going to come down in a 3-wave B? Not really. But I can't leave it just totally unsaid. Okay. And it's a little bit of ways, and I would update before then anyway. If we're going to do that move, I'm definitely going to update and make you aware of it, okay? But what we really want to happen here is we may have one more hit to the high, and then we want this to give us corrections. We want to come down corrective. We don't want to come down in 5 waves. Because what starts with 5 ends with 5, and then that would not be pretty. Alright, so I hope you enjoyed this video. I hope it helped. And this has been a very difficult leg. I think if this is not done, just like with Bitcoin, that it's close to done. 1, 2, 3, 4, we may have another hit to the high. And then we're going to have to see what happens here. All right. Hope you guys have a wonderful Saturday. And I will see you Tuesday for the next video.